So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani. Today, I am joined with Scott Maurer. Scott is the Director of Business Development for Advanta IRA, a nationwide self-directed IRA administrator. Scott has worked for Advanta since 2006, helping thousands of people invest in alternative assets, mainly real estate, using their IRAs and old 401ks. Scott is a frequent speaker and lecturer on the topic of self-directed IRAs and has also appeared on many real estate and investment podcasts. Scott is also an attorney and a member of the Florida Bar, although he does not give legal advice to Advanta clients. Scott, welcome.
Hey, John, thanks for having me on today.
Absolutely. Like we were talking offline, very excited to get into this topic. Haven't talked much about it, but obviously you are a lawyer in Florida. So kind of talk about what led to, getting into this niche.
Sure. Well, it was coming out of law school. I was able to connect with our owner, Jack Callahan, who had started this small self-directed IRA firm. He was also an attorney by degree. And had this company, here in Tampa Bay area in Florida, that helps people invest, in real estate and other assets using retirement accounts. So he and I connected that way. And at the time, he was looking to start to grow the business. So I joined Jack at Advanta. I think I was the third employee hired, and we're now up over 30 plus employees, both in our offices in Tampa and Atlanta. So that's kind of how I got started into the business. I didn't know a whole lot about self-directed IRAs. Maybe like a lot of people listening to the podcast, I probably actually knew less than anyone listening to the podcast when I first started. And it was baptism by fire to some extent of really understanding and learning not only the ins and outs of kind of self-directed, the things we'll focus on today, but really even just general, retirement account information, IRAs, Roth IRAs, and those types of accounts. So that's really how I got started. I do some, like I said, I'm an attorney. I do some legal work on the side. I can't do any legal work for Advanta clients, but that's how I got into the business, and been over 16 years now. So learned quite a bit during that time.
Awesome. Well, we're excited to get into it. Is your legal work that you do on the side related to real estate as well?
Not particularly. No, one of the silent partners in Advanta is an enrolled agent here in the Tampa Bay area, and so he does a lot of. I do a lot of small business setups. And some modest estate planning. I've done a few things related to real estate, drafting of deeds and notes and things like that for a few people. But my main day-to-day operations, the things I spend 99% of my day on, is really helping educate people about self-directed IRAs and helping people get set up or walking them through the process, or potentially even talking to referral partners as well and showing them how they can use IRAs and old 401ks to raise capital in their upcoming projects.
I love that. That's awesome. Yeah, like we were talking about, it's definitely an underutilized sort of aspect. And if I'm not mistaken, there's over $1 trillion in
there's actually, in retirement accounts alone, there's over $25 trillion.
Oh wow.
Out there.
Okay.
So there's quite a bit. Of course, that fluctuates and the markets go up and down and the values maybe fluctuate a little bit, but our best estimates are probably only 4 to 5% of that money is in self-directed. So yeah, at that point you're talking maybe there's $1.5 trillion in retirement accounts that are being self-directed currently, but obviously there's such this huge other pool of funds out there being underutilized because I think that most people don't know that they have the ability to take their IRA out of the stock market, out of mutual funds, and put it into real estate investments, anything from a fixer upper down the street or a rental property to investing into a large multifamily syndication deal. There's so many different things you can do, and I think most people, again, they just kind of have their blinders on. They're focused on the mutual funds and stocks because that's what an advisor is telling them to do, or simply that they think that that's all that's available to them.
Awesome. So yeah, I mean, that makes perfect sense. So let's kind of get into it. Obviously, like you said, most people see it as just a retirement, you put in your, what is it, 6,500 contribution and each year, and invest in probably a mutual fund, maybe an ETF here or there, and let it sit. And hopefully by the time you retire, it's enough. So talk about, what your job entails, of course, obviously educating, and then of course, kind of the ins and outs of alternative investments inside of a retirement account.
Sure. Yeah. So I guess, yeah, the ins and outs of again, kind of what I do on a daily basis is really helping people understand that there are options, that, they're putting in that $6,500 a year, to an IRA potentially, or they are putting in, if they're working for an employer, they're able to contribute actually quite a bit more each year into, say, a 401k. But what happens for a lot of people is they build their retirement accounts up. They work for an employer for, say, 5, 10, 15 years. They build themselves up a nice little nest egg inside that 401k. And when they leave that employer, whether it's, they hit retirement age, or whether they just, move to a different job, or whether they're let go, they can take the money out of that old 401k and roll it over into an IRA, and really open up the investment options that they have. Most people who have 401k funds, or money in a 401k plan, are limited maybe to 10, 15 different funds to choose from within that 401k plan. But even just getting the money out of there and into like an E-Trade account, right, or a Scott Trade account, or an Ameritrade account, where you can invest in stocks and all types of mutual funds. And also, what we like to talk about, obviously, is the ability to get the money out of that public securities and that public trading market, and actually using that money in private investments. Again, because most people, they save their retirement accounts, they get started in those 401ks where these options are simply not made available to them. They don't realize that they're out there. And it's when they roll money out into an IRA that they start poking around, or they meet somebody who's raising capital and tells them, hey, you could use your IRA to make this investment. And that's a bag of money that I like to say, I think people are actually probably more likely to tap into if they're looking into a private investment. And their options are either say, hey, I could take money out of my personal savings account, or I could take money out of my IRA. I think more people are more likely to lock up some of their cash from their IRA account into a longer term investment, whether it's year, 2 years, 5, 10 years down the road, as opposed to their personal savings, where they need money in an event of emergency or medical condition, something like that. So it's really that's what I do, is again helping people understand that process. There's no tax consequences when you look to move your money from a Schwab or a Fidelity account into a self-directed IRA. There's no tax consequences, even more on the investment income that you make. So when you are returning, when you get those returns every month back into your IRA from your investment into a syndication, or your investment into your single family home that's spitting off rental income each month, that's all tax neutral to you as an individual. And I think that's what's really key to understand, and that a lot of advisors don't really understand when they're talking to their clients about these types of investments.
Yeah, and that makes perfect sense. And not to knock on advisors, I was a broker for a long time, but they're not usually going to make money and offering that to their clients. So it's not usually a way that they sway them. Whereas it sounds like, obviously, moving over to your side, it's purely self-directed, which means you're taking the direction, obviously, from them. So I guess now kind of talk about how it works, kind of some of the nuances for alternative investments inside an IRA.
Sure. So I think it's a couple things to understand, and on the nuances is really when people ask, like, what can I invest in with my self-directed IRA? What options are available to me? Because, as you mentioned, a brokerage firm sells investments, and you pick from things that they're selling. With the self-directed IRA, you are in complete control of choosing that investment. So it's important to understand kind of what options are out there. And the neat thing, in a sense, is that the IRS has only ever put in place limiting rules on what you can't invest in, as opposed to saying all the different things that you can invest in. So to understand kind of your investment options, just know that you cannot invest in life insurance products, and you cannot use your IRA to invest in collectibles like artwork or antiques, rare coins, things of that nature. So those are the only two prohibited investments. And you also cannot invest in, say, real estate that you want to use personally, whether you want to vacation in it, whether you want to rent it to yourself. There's certain family members as well that are prohibited from the IRS is getting a benefit from those assets. So outside of that, though, outside of the kind of personal and family use of a real estate project or life insurance or collectibles, really it's anything under the sun. I mean, we see primarily real estate investments, single family homes, rental properties, rehabs, condos, like I said, multifamily and commercial syndication deals, tax liens and tax deeds. I mean, the list really goes on and on. That's the main part of what we see. We also do a lot of, say, precious metals investing, people buying physical gold and silver, or investing in startup companies. So there's a lot of different things you can do, but on the unique side, we've seen people invest in mausoleum crypts that come with titles. You can invest in, had a couple clients invest actually in movie projects, people putting together funding for a private movie. And they were able to use their IRA to do that. So there's a lot of unique things you can do. Again, as long as it's not life insurance or collectibles, our only concern at Advanta is just making sure we can document it. So that's usually in the unique cases, and maybe that's the difficult thing. For instance, the mausoleum crypts, when I was first approached by it, a client saying, I want to buy a mausoleum crypt. I'm like, I don't know that you can do that. And he goes, well, do they come with titles? I'm like, oh, well, if they come with titles, then we can put the title of your IRA right on the mausoleum crypt. So
that's wild. Wow.
Yep.
That's a very unique investment for sure. But you know what? If you can put it in there, that's awesome. So
yep.
Obviously the list of what you can do is, like you said, what the IRS went with, because it's very clearly a lot shorter. So kind of the sky's the limit. So I guess talk about some of the misconceptions, maybe from like the capital raising side and some of that side of why people maybe don't go after IRAs. One thing I've heard is how long it can take for the IRA money to be available and into the syndication. So kind of talk about some of those.
Yeah, I think, and that's something, unfortunately, within our industry, there's not a lot of control over certain aspects of that. So it does, if you were to want to invest in a syndication and you're investing out of your personal savings account, you log on to your bank and you initiate a wire and you do the paperwork in a matter of a day or two. With IRA accounts, it's going to take usually a few days to a few weeks to get money transferred or rolled over from your other IRA or your old 401k. It just really depends on where and who that other custodian is. There are some custodians where we request a transfer, we actually have the money within a matter of a few days. And so within a week to 10 days, we're actually able to, that's from the start of getting your paperwork, have your account opened, have the funds transferred, and actually making the investment into the syndication. That's on the shorter end. Now, on the longer end, sometimes it can take 2 to 3 weeks. But one thing we do, especially I would say for capital raisers, if you're concerned at least about getting people locked in, once we have an account set up at Advanta, we can do all the subscription documents, all the paperwork. If it's a loan, all the investment paperwork, have it all completed and ready to go while we wait for the funds to arrive from the other custodian. So we don't have to wait for the money to arrive before we start working on all the paperwork. So we try to shorten that period as much as possible. But again, it's so far, at least how IRAs and 401ks work, is the funds have to be requested. The other funds have to, the other custodian has to send us that money. And yeah, it does take a couple days, but really it's not that long. I think in the grand scheme of things, just get your clients, if they want to use their IRA to invest with you, let's get them started early, get the account set up and get that money moved over. And we certainly can tell people, hey, here's a faster way to do it, or here's a suggestion if there is a time crunch. But it usually is not nearly the time crunch that people think it might be. If somebody has a couple weeks lead time, we're going to be able to get it done, no problem.
Okay, so really what it sounds like then is if the IRA is with another custodian, then it's really about, the longest time is really that ACAT, I don't know if it's an ACAT, depends if there's assets in it, I guess, or just the transfer to you guys as the new custodian. But if you're already the custodian and the funds are there, then it's a very smooth, easy process. Oh,
absolutely. Yeah. If the account's open and we have the money here, as soon as we can complete the subscription documents or the loan documents, however the investments being set up, it's a matter of just getting that paperwork done, having the client sign off and approve it for us, and then we send the funds. That could be done in a matter of 2 or 3 days. So there's no hold time on our end of a review period or a legal review. In fact, some things we don't do at Advanta, even though I'm an attorney, we don't give legal advice. So a client coming to us to invest in a syndication or loan somebody money, our job is to look at the paperwork, make sure the IRA is listed properly as the owner, make sure that our client has reviewed and approved the documents for us, and then we send the funds out. So we are not going to hold up the process.
So
of getting the
you guys
investment.
don't have any like in-house advisors who are going to like review the PPM and make sure it's a good, good deal, I guess, for lack of better terms, or anything like that?
We don't, and that's kind of a good kind of segue into, I guess, another. I don't know if it's a misconception at times, but the fact that, say, we would hold an investment inside an IRA account on behalf of someone doesn't mean we're endorsing it. So for people who are coming to us to want to invest, we're not doing due diligence on the investments. That is strictly up to the client. As the name kind of indicates, self-directed means the IRA owner themselves is in charge, making the decision. So on one hand, that's obviously putting a little bit more responsibility on them to know what they're doing. And then also, but though is also giving them more freedom, right? So if you, like I said, if you go to an advisor who has more control or might talk somebody out of it, if the account's with us, we're not talking anyone out of any investment. We're just going to make sure everything gets properly titled.
Awesome. So you guys are strictly just the custodian. It's full self-direction. I love that. That's
Absolutely.
awesome. So really, so what do you think then is kind of a reason that it's an underutilized funds or kind of that area?
I think on the single family home side with real estate, there may be some elements. Sometimes it's not utilized as much because people want to be able to, if I own a vacation house on the beach, I want to use it for a good chunk of the year, and then I'll rent it out the other times, and you can't do that. But for the people who know about self-direction, I think that's probably one of the main limiting factors. But I think really it's people don't know. And that's why we love coming on podcasts like this one with you, and talking to people and doing webinars and bringing guests on our webinars, because we're just trying to raise the awareness. Again, if you figure that 4 to 5% of retirement accounts are being self-directed, I don't think that 95% of people are aware and then simply choosing not to do this. It's a matter of a large chunk of the population having no idea. And it's kind of one of those interesting things, as I've been in the industry now, like I said, for almost 16 years or over 16 years. To me, it's second nature, obviously, but to hear somebody call up and say, hey, I just found out I could do this, I've known about it for 16 years and so have a lot of other people, but you find people like that every day. And I think for someone raising capital, it provides you a good opportunity, especially if you have new projects coming online, to tap into your existing database, right? Just go to your existing investors. If you haven't been using IRAs before, reach out to your existing investors. Hey, I have a new project. If you'd like to invest with me, hey, here's another way you can do it. Again, somebody may say, hey, I got some money already with that individual. I really don't want to tap into my savings anymore to do that. But their IRA, their 401k that they're not planning on touching for another 15, 20 years might be the perfect, basically the perfect tool for them to make that investment.
Absolutely. And on that side, is there anything different about, like, obviously at the end it produces a K1 that wouldn't apply to an IRA investor then, correct?
Well, the K1 would be issued, if it's issued, is issued back to the IRA account itself, and back to Advanta's trust tax ID number, not to the client's social. That's something that, again, we take very seriously on the front end with working with the client to make sure this is completely tax neutral, right? So the money comes from Fidelity or Schwab or brokerage firm to Advanta with no tax consequence. We make the investment into the piece of real estate on behalf of the IRA with no tax consequence, and then all the income that's generated, again, back to the IRA, no tax consequence to the individual at all. It's again, people talk to their advisor and say, I want to buy real estate, and the advisor said, oh, that's going to be taxable to you, because they think that the client needs to pull the money out of the account to themselves personally, which does trigger a taxable event. But what we do is facilitate you not having to actually remove the money from the IRA, but just opening up different investment options. And when you get an account statement from us, rather than it showing the number of shares or mutual funds or stocks you hold, it simply shows your real estate investment. So it's just flipping out self-direction is really just flipping out a different type of an investment inside your existing account.
Got it. Okay. So really it's handled just like any other IRA. And then of course, once you reach that age, it's still 59 and a half. You can start taking, 59 and a half distributions are treated exactly the same, no matter where the funds were gained from. Okay. So that makes perfect sense. So really it's just a lack of knowledge, right? Okay.
That's what we think. Yeah. I mean, it's just trying to get people to understand what their options are.
Absolutely. So let's kind of switch. Obviously, back in November, we had, and I think one thing that really kind of brought it to light, and you can kind of speak on this, we had the House Reconciliation Bill, if I'm not mistaken, is what it was called, that was potentially going to take that away. Is that correct?
They were, well, yeah, what was going to happen with that reconciliation bill if it had gone through? They were going after a few different things. One was they were trying to attack very, very large IRAs out there, people who had excess of, $5 or $10 million in their IRA accounts, which there are very few. This is a middle class retirement vehicle, and that's what they were trying to go after, the people abusing that. And there are a couple big name individuals out there who they were going after. But the other thing they were going to restrict, what was proposed, was the ability for someone to use their IRA to invest in, make an investment that required any kind of accreditation, based on your income or your education level, and take some of those investments away from people to use their IRA to do it. And that would have obviously affected quite a bit the people raising capital, right? Who set up the funds, the 506Cs, 506Ds, et cetera, where you need to have someone needs to be accredited to make the investment. So actually, our firm, we did what we could. We had a change.org petition out there for people to sign. We reached out to Congress people, had our clients reach out to them as well. And I know other providers were doing the same thing. And the good thing is, even when the reconciliation bill was moving along, those provisions got removed as it pertained to self-directed IRAs. And of course, that bill itself never passed, and doesn't look like it's ever going to pass anytime soon. So that's that was a kind of a threat to the industry, at least to a portion of the industry. I mean, you still could have bought single family homes and then private loans and things like that. But yeah, they were going to go after these accredited investor type investments for IRA accounts, which would have obviously deprived IRA owners of other avenues to invest. It would have deprived capital raisers from a good source of capital. So thankfully, people got the word out, and then that was removed.
Awesome. Yeah. I know a lot of people kind of jumped on that. And like I said, it kind of brought it to light in terms of, that is an option to use your IRA, self-directed 401k. So talk about, I guess, 401ks as well. Same thing applies. It's kind of a short list of what you can't do. It's just like an IRA, or kind of talk about that.
It is, yeah. So the restrictions are the same on investment types. The difference with a 401k and an IRA. So an IRA would, you're completely in control and can move money around your IRAs and into different IRAs and whatever percentages you wish, or whatever amounts. You can have multiple accounts and transfer back and forth without any issue. The limiting thing that happens with 401ks is people who are currently employed and have a current employer's 401k, they can restrict your ability to move money out of that plan. And that's simply a factor of, if I'm a company and I set up a 401k plan for all my employees, if I agree to have everybody restricted to, say, Fidelity's mutual fund offerings, I'm going to get reduced fees to actually administer the 401k plan. So that your current employer doesn't necessarily want to allow all of these different investments, because it's going to basically cost them more for administrating the plan itself. So current employer plans can be very restrictive. But as I mentioned earlier, any former employer's plan, once you're no longer working for that company, you can roll that money into an IRA account and invest from there. So we talk about 401ks as an investment vehicle, but for most, what happens is people leave their employer, and that money gets rolled over into just a self-directed IRA. For people who are sole proprietors, we do offer what we call a solo 401k that allows you to, if you own your own business, start your own 401k plan, contribute a lot more money each year, but you are subject to the same investment restrictions that the IRAs are. It's a different amount of money you can contribute each year into the 401k versus the IRA.
And relatively speaking, the solo 401k is fairly new, right, compared to the others?
It is. So I think the original 401k came into being back in the 70s. And the solo 401k is really a creature of the last 15, 20 years at the most. I think back in the early 2000s is when that came into being. But basically giving a sole proprietor the same ability to set up that 401k, where you can put upwards, I think now the number's up to $60,000 or $61,000 a year into a solo 401k if you're a sole proprietor, versus, as you mentioned, the $6,000 or $7,000 that you get in a regular IRA. So definitely, if you own your own business, you don't have employees, you want to investigate a solo 401k as a place to stash some more money, basically on a tag, get some tax deductions, and obviously grow your own retirement account as well.
Awesome. Yeah, that's great. I was reading about the solo and how obviously for someone like me works much better because I am my business and it's just me. So that makes perfect sense as why they came out with that. So
Mhm.
moving forward, is there any like legislation or anything you're keeping an eye on that, still might affect this, or is it pretty much been tossed off the table?
Well, it's been tossed off the table right now, but obviously that was kind of, I wouldn't say a wake up call to the industry, but something that really got everybody's attention because it was something, those little provisions or something had been talked about by one senator in the past years who really never got much further really than his talking points. And to have it suddenly show up in a piece of legislation like that was eye opening. So I think we're certainly on guard now for looking for things like that to show up again and be able to quickly mobilize and get the word out that it's overly restrictive. I know that there's a recent act coming up. There was a Secure Act that was passed during the last presidential administration that changed some of the IRA rules as far as distribution ages or the required distribution age, and made some other tweaks. And I think there's a Secure Act 2.0 that's coming out that has just really wide bipartisan support. It looks like that's going to pass at some point soon and go into law. But it's really just changing rules. As far as like contributions, I think one provision is for individuals who are still paying on student loans to be able to have their employer make a contribution still to their 401k while the student is paying, while the individual is paying off their loans. Again, increasing the required distribution age it's gone from 70 and a half to 72, and they're looking at now phasing it up to 75. So I
For
think good changes overall.
for
But that should,
RMDs?
yeah, for the required distribution, getting it up to age 75. So
Yeah, I like that because so like I mentioned before, I was a broker and worked with high net worth individuals. And listen, not to say that 70 and a half is not an age where, you want to start considering that, but I talked to plenty of people at that age were like, I'm not ready. I don't need this money. And now I have to take it out. So that's nice to see that they're starting to recognize that. And as humans progress and I think live longer as well, 70 is the new 40. So
yeah, absolutely, yes. It certainly makes sense to index. It had not been changed since IRAs were started back in 1974. It had been 70 and a half forever. Now in the course of about 5 years, they bumped it up to what's going to be age 75.
okay, that's great to see. Well, I've really enjoyed this. It's been incredible information. I know the listeners are going to be very grateful. Shed a ton of light on this. We're now nearing the final 5 questions. So 5 questions we ask everybody.
Okay.
So first question, what's the best advice you've gotten from a mentor?
Um, I think really it's something I hadn't done a lot of, but I think really planning, it sounds very simple, but if you don't do it, you can miss a lot. Is really planning your day, having a good calendar you keep updated and keep yourself task oriented, right? And putting those deadlines out for yourself. If you say, hey, I want to do all these different things, but you don't actually put it down and give yourself a deadline or put it on your schedule to work with, it never gets done, right? And I think people, again, it sounds very simple to do, but that's something I implemented years ago, and so much more productive when you do that.
Absolutely. That's actually one big thing that I've learned from a mentor recently is sure, you can have daily goals and goals are good, of course, but actually blocking off your calendar, like blocking off an hour and being like, this hour, I'm going to do this task.
Mm-hmm.
And wow, what a difference that makes when
It
it's
really does.
right in front of you, blocked off, you're actually going to accomplish it, especially if that's the only hour you have in that day to accomplish that. If you kind of free flow your day, things fall by the wayside pretty quickly.
Mm-hmm.
Awesome. So second question, what is it about your career that makes you feel like you're fulfilling your why?
Again, I think it's something starting out not knowing much about the industry, and really learning as I've gone through the job, and you start to see how you're helping people. At the end of the day, the dollars and cents are obviously nice when you help grow a business, and that's certainly part of it to grow personally with a family and do things like that. But it's also the ability in this role that I have to see people be like, hey, I'm really glad that I found you guys. I wish I'd known about this years ago. So that what you're providing is definitely of value to a lot of people. And we see, and especially people all over the spectrum. Certainly we have clients who are high net worth individuals who use this as a tax shelter. But we have other people who are like, hey, I have some money in a retirement account, and I know that what's there is not enough if I leave it where it's at. I need something else, and I'm glad I found you that I have other avenues to invest in. So it's obviously, again, being able to fulfill personal goals and things that I want to do. It's enabled me to do that, but also certainly in doing that, giving back and really helping people get their own financial freedom.
I love that. That's awesome. That's why I love this industry. It's all about helping people and, doing whatever we can. So before I ask this next question, do you invest in real estate yourself?
I do.
Awesome. Love that. So what is your favorite non-real estate or investment related book?
Non-real estate related investment book? I'll just go with what I'm reading right now. My 9th grader is reading To Kill a Mockingbird.
Oh,
so I like
tried
that.
And true classic.
So I've started picking up, figured I'd help him out with his classes if I just read it at the same time. It's been years since I read it, and I was hooked right away again. So
I'm glad that's still part of the curriculum, because that's an incredible book. Awesome. If you could have any superpower, what would it be?
If time travel is considered a superpower, can that be one? Okay, then I think that would be mine. I think it would be neat to go back and see different places in different times. I'd love to see my dad when he was young, or my grandparent. My grandfather was in World War II, things like that. Going back and seeing them and seeing their family, I think would be a neat time to, not only just for family, and obviously just think all the different historical things you could be witness to.
I know I'm a bit of a history geek myself. Perfect. And last one, what's the best way for people to get a hold of you and learn more about Advanta?
I think you can certainly go to our website, advantaira.com, to just get more information. To get a hold of me directly, my direct line, it's area code 727-581-9853, and my direct extension is 1123. So that's our main line, and my direct extension is 1123. Give me a call. If you go to our website, you can find the About Us. You can email me directly from the site as well. Always happy to answer questions, certainly on self-direction, but if you have other questions just about retirement plans and you don't want to sit on hold with your advisor, your rep for 20 minutes, give me a call and see what I can answer for you.
Awesome. I love that. And we will link all that in the show notes. Scott, this has been incredible. Thank you so much for coming on and educating us.
All right. Thanks, John. It's been a pleasure. Great conversation.
Absolutely.
Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.